Morning guys, welcome to Operation Crypto. Quick market update today to see what's going on, not just in crypto but across the general macro outlook, and we'll take a look at something which is quite important today, which begins looking at the current price of Bitcoin. We managed to maintain price action above 31k. I opened a long yesterday on these 2 weeks. I was waiting, so I saw these 2 weeks the previous day and I was looking for the same type of price action again. I was looking for a fake out before a nice draw up, and that's exactly what we did here. We pushed up and I set my stop loss at around 32,100 and we wicked down and I got stopped out on that. So I was in profit around 30%. Quite high leverage, did around 14x, but I had my safety in place. I've actually opened another long this morning just as a scalp. I opened at 31,600. I got really tight stop loss just below these 2 weeks, so I don't lose much if I do lose. But I'm looking, I saw these 2 weeks again when I woke up and I thought, let's see if we can get a bit of another rally before potential bearish scenario. Looking further down the line now, I think there's still a good chance that we could push up towards this level of resistance around 33k, but depends what goes on across the markets now, because there's quite a big piece of news. I'll tell you what we'll look at that now. Quantitative tightening starts today on the US markets, which is insane. It's basically the US which are pulling out funds out of the market and pulling out liquidity. So the Federal Reserve's almost 9 trillion portfolio is about to be reduced starting on Wednesday, which is today, in a process intended to supplement rate hikes and buttress the central bank's fight against inflation. While the precise impact of quantitative tightening in financial markets is still up for debate, you would expect that they're pulling out such a significant amount of money from their portfolio that it's going to take an impact on the markets. It does say in a nutshell, quantitative tightening obviously is opposite of quantitative easing. It's basically a way to reduce the money supply floating around in the economy, and some say helps to augment the rates hike in a particular manner, though by how much remains unclear. And it may turn out to be anything but a dull watch and drink pie party, as that gremlin Janet Yellen says. So quantitative tightening starts today. 9 trillion portfolio. I read on TED Talks Macro, pulling out $1.1 million a minute, which is absolutely insane. So just be wary that we've got this coming on soon. Here we go. The Institute's calculations, the Fed balance sheet could shrink by almost 1.3 trillion by the end of 2023. So it's not going to happen bang tomorrow. It's going to happen over a period of around what would you call that? About 18 months. So it's still quite a way off, but depends how aggressively they pull out and if it does take a significant impact on the market. If the QT continues expected, this 1.5 trillion reduction in balance sheet could be equivalent to another 75 to 100 basis points of tightening. So it's quite a significant amount, that. So that's the main bearish driver of potential further bearish news going on in the markets. I mean, currently if you're looking at the dollar, it's actually starting to push up now. It's looking to get a little bit stronger. The Nasdaq is slightly up on futures, but not much, and the S&P 500 is also slightly up on futures. Crypto is down today, but you could say we are potentially forming another bit of a bull flag within this area. So that's what we're looking for. We're looking for a bit of a breakout. Hopefully we can get up towards these 33Ks before we do get any falls, but it depends. I mean, pulling that amount of money out of the US markets is quite a heavy blast. But there's still possibilities that crypto could rally at that same time, so just be wary of that. But more than likely, we're going to see another little bit of a rally before we do sell off and come back into this range at some point. But I'm still on the edge of optimism, and we'll see how that plays out over the course of the next few weeks. Looking at the daily time frame, we've had a major bounce off that lower oversold territory down there. For me, that looks like a bottom. Still very unclear what happens. I mean, usually when you get a sharp wick down, you do get a buy off pretty much straight after. If you're looking at this area here where the nice wick, bang, straight back up. And even if you're looking at when we got the oversold RSI, which last time we was down to those levels, pretty much exactly as we, let's just mark that horizontal ray. If you look at up there on the daily time frame, when we had that COVID-19 crash, RSI hit down towards that level, and we pretty much bounced off that same level again. So that was a bottom. Who knows? It could be a bottom, it could not, but It would be great if it was. It'd be nice to see a little bit of positive price action. I mean, even we're coming into a third day of bullish price action now, which is, it's one of those. Yesterday's video says, is this a bullish price action, or is it just a relief rally? For now, it's a relief rally. I think for any type of bullish price action, you need to be looking to get back up above 36 and 37k, maybe even around these 2 weeks here, around 37, like I mentioned there. We're a long way off that yet, so for now, it is just a bear market rally, and you would expect to either go sideways forever, we drop back down into a range, or we even come back down and test this lower wick down at 26k as well, and we've got this trading area down here at 23, which I don't think will come down there, but you never know. Like I say, with such a significant amount of money getting pulled out of the market, it's something that could definitely come into play. So that's Bitcoin covered. Hopefully we push up to 33k. That's what we're intending to do. With that, altcoins may potentially come up. Bitcoin dominance is pushing up towards 47%. I've been mentioning dominance for probably around 6 to 8 weeks now. I said, look, Bitcoin, whenever you are in a cycle and it's starting to turn around, or even part of the general cycle, Bitcoin goes first. It needs to reclaim its authority on the market, and I think a push up towards 52% is an area where we should be looking to target. Once that's happened, then Ethereum can push on, and then I think we'll get a bit of bullish price action towards that, and then hopefully we start to see some decent rise in altcoins, but we could be talking 6 to 12 months away yet. But let's see what goes on. Looking at Ethereum USDT, we did actually reclaim 2k, but then we dumped straight back down. This is the level we need to hold, really. It's a major support level at around $1,700. I think if we do lose that, you're going to look at buys at 1,400, and then if you go into a pass, you got that region down there around 800. I don't think that will happen, but just beware, it could always be an area. Some altcoins are down 90 to 95%, and some decent ones as well. So I've started to buy in some altcoins. I've started to buy RSR. Polkadot's down a significant amount. I've started to buy some of that. I've just been loading up on assets that I like, and I've started to accumulate. I do know that the fact that the price can go down at some stage, but it is what it is. I'm happily sitting underwater at some stages. I'm in profit on RSR for my new buys. Polkadot probably about 1% underwater a minute. I bought around 10, actually about 10.41. We're currently 10.39 now, so a bit less than that. So if it goes lower, I'll just dollar cost average down, get a nice average price. If it goes down to $4 or $5, and I'm buying down there, I'm going to be looking at a $7 average dot. So that's something I'm looking to do if the price does come down to those levels. But that's it. That's the update for today. I am in a little bit of a long position with some tight stops. I'm targeting 32k for a scalp. Depends how the market moves, and might move that take profit region up, but we'll go and check out BitGet. It's one of the most up and coming exchanges now, and I'm using this more than Binance, to be honest. I think in the UK you can't do leverage trading, so I've been using BitGet. So if you are wanting to look at any type of trading like that, definitely check it out. You can get up to $4,163 in rewards for completing some tasks. I've done 3 of them already. KYC reward, spot reward, futures trading reward. All you have to do is pretty much do exactly what it says, and you can get some rewards. Also, a $4,000 trial fund on some USDT margin futures accounts. So definitely something that you should check out. These ones are easy to get, so you can at least get $163 very, very easily. That is paid directly into your account. Just use that link below. Also, you can get up to 10% off your trading fees if you do use that link. So, but that's it. That's going to be it today. Make sure you check BitGet out. Hopefully, this quantitative tightening does not severely impact the market over the next 18 months, but you would expect it would do.